You ever get that feeling when your RSI hits 30 and you're like, oh yeah, oversold, time to buy, and then price rips through your stop loss and keeps falling? Yeah, been there. RSI is cool and all, but on its own, it's kinda dumb. Now imagine if RSI had a brain. What if it could learn from thousands of past reversals and go, hey, this looks like one of those pivot moments again. That's exactly what this indicator does. It's called the KDE Optimized RSI, and no joke, it turns your RSI from a basic momentum line into something that actually predicts reversals before they happen. And the best part, it's completely free. I'll show you how it works and how to trade with it. But first, we've got to talk about the RSI you think you know. RSI is one of the most popular trading indicators. Everyone uses it. Trading gurus, mentors, and even that one TikTok trader with 12 monitors. And yeah, the concept seems simple. When the RSI is above 70, price is overbought. And when it's below 30, it's oversold. Buy low, sell high. Easy game, right? Wrong, because here's what actually happens. You see RSI hit 30, you go long, and then price drops like it just got rug pulled. You short at 70, and price decides to become a rocket ship for the next 5 candles. It's like the RSI was daring you to be wrong.
You can't keep getting away with it!
That's because the RSI doesn't know what's coming. It just reacts to price. It's like trying to predict the next TikTok trend by watching last week's videos. Laggy, late, and useless when things actually shift. So here's the thing. What if your RSI could learn where actual reversals happened in the past, and then give you a heads up when conditions look just like that again? That's where the KDE version flips everything. Okay, so what even is KDE? It sounds like a programming language or fancy term used by crypto bros. Haha, relax. I'll make this super simple. KDE stands for Kernel Density Estimation. Here's how it works. Every time a candle forms a true pivot or a clean local high or low, the indicator saves the RSI value of that candle. It does this over and over, building a massive database of what RSI values usually look like when price reverses. Then, using KDE, or basically just a fancy way of saying probability math, it figures out how similar the current RSI is to those past pivot RSIs. So instead of just going, hey, the RSI is at 72, the market is probably overbought. It says, this candle's RSI looks exactly like those pivot tops we've seen 2,000 times before. So heads up, this might be a reversal. You don't even have to do the math. It just spits out a number called KDE% right next to the candle. The higher the number, the higher the chance that the candle becomes a pivot. If it's above 30%, you've got a potential reversal. And if it's above 40%, it's flashing a neon sign that says, this exact RSI value has marked tops 40% of the time historically. So you might want to pay attention and look for a trade opportunity. And when it hits, it plots a nice arrow on your chart. Bullish green for buys, bearish red for shorts. Way better than the old and boring RSI. Now let me walk you through a trade setup using the KDE RSI. We're looking at Euro USD on the 15-minute chart. Your RSI is chilling at like 65. Nothing too dramatic, just another slow bleed. But the KDE RSI, it flashes a red arrow with a KDE% of 80. Now here's the catch. It happened right after a liquidity sweep. You know that evil little wick that dips just above a swing high, triggers everyone's stop loss, then immediately pushes downwards? Yeah, that happened. And the bearish arrow popped right after that. So you take the entry, set your stop loss just above the wick. You're risking a small move for a potential reversal. And the next candle, boom, you're in profit. 5 candles later, you just secured a clean 2 risk-reward trade while everyone else is still waiting for a moving average crossover. And that's not some cherry-picked miracle. It happens a lot. The key isn't the arrow. The key is why the arrow shows up, because now your RSI isn't just reacting, it's predicting. Don't just blindly buy every green arrow or short every red one. That's how you end up blowing up your account. What you want to do is combine it with basic price action. Wait for the signal. Look at where price is. Are you near a support level, a demand zone? Did price just sweep liquidity? Then just add confirmation. Maybe it's an engulfing candle. Maybe it's a chart pattern. Whatever your thing is, use it. This indicator gives you the early warning. The rest is about building a sniper entry. Oh, and because it plots in the candle close, there's no repainting nonsense. What you see is what you trade. And look, this works because it's not guessing. It uses historical, tested, and proven data about where real reversals happen and what the RSI looked like when they did. So if you're still using the RSI the old-fashioned way, hoping price reverses because you saw the RSI hit 30, you're basically bringing a knife to a gunfight. Start using the KDE RSI. It's free, it's simple, and it gives you a real edge in spotting reversals before they happen. There'll be a link in the description for easy access. And if you want me to break down a full reversal trading strategy using this tool, drop a comment. Until then, don't trust the RSI, trust the math. That's all for today's video. If you enjoyed it, make sure to leave a like and subscribe. Until next time.